everyone. Welcome to the Your Millionaire Blueprint. This is a VA home loan seminar. Super excited you guys could come here tonight and visit with me and hang out for the next hour or so. And so therefore, we're going to talk about how you too can be a millionaire using your VA loan. My name is Danny Brinson. I am here in Chesapeake, Virginia. I am a military spouse of 26 years now. Time flies when you're having fun. And so what I've been doing here is I am a real estate agent located here in Chesapeake, Virginia, help VA buyers move to and from the area. I have moved actually myself 10 times and used the VA loan multiple times. All right. First and foremost, what is a VA home loan? And so if you are active duty, retired, or served any time, you are eligible to use the VA home loan. What are some of the perks? VA home loan, there's some misconceptions around this. You do not need a down payment for a VA loan, which is the only loan that you don't need a down payment for. So 0 down payment. You have no monthly mortgage insurance, which is a fancy way of saying you don't need to pay and ensure that you're not going to default. The other thing is there's favorable interest rates. I'm sure if you've turned on any news station or read any headline, interest rates have been a little fluctuating. But I will say with a VA home loan, you have the best interest rate out there compared to all the other products available. Let's see. And also, so the VA home loan, veterans, first-time use. Veterans, first-time use, there's no loan limit on a cap. So it doesn't, if you want to buy a $200,000 home, you can buy that. If you want to buy $1 million home, you can use that VA home loan with 0% down. And we'll go a little bit more in detail as we go through these slides. And also, there's a thing called a VA guarantee. And what that means is the VA guarantees the mortgager a portion of what you borrow. And how they figure that out is a big calculation on the end. But really, the nuts and bolts is they guarantee 25% of the overall loan amount. So who is eligible for a VA loan? So if you're active duty and you've served 90 continuous days, you have earned the right to have a VA loan benefit. If you are actually National Guard or reserves, you also earn that. It just takes a little longer. 6 years in service unless you've been activated. And what does that mean by activated? It means that if you are a National Guardsman or gal or a reservist and there's a natural disaster and they say, hey, rally the troops, we're heading down to, say, Hurricane Katrina, that means that you've been activated. So it shortens your length of time that you have to serve. And also if you're a veteran, of course. So if you've served a certain amount of time and you've decided that the military, you're going to retire and get into the civilian sector, you still have the ability to use your VA loan because you've served and earned that right. So that is how you are eligible for a VA loan. So how do you know that you have eligibility, right? So there's something called a COE, a certificate of eligibility. And what happens when you're like, hey, I'm a veteran or I'm active duty service member, I want to buy a home. What happens is you connect with a lender, and that lender can go ahead and go into a portal and go ahead and pull your eligibility. So on that eligibility, it will go ahead and tell you basically how much you can shop with. That's what that COE shows. And a lender can do that in really a very short amount of time. You too can actually access that, but when you talk to a lender, that's part of their sort of vetting process. So they'll go in, pull that certificate of eligibility, and then give you the information to make sure that you have kind of a ticket to play. You'll see on here, it talks about corrections. That's if you get married, excuse me, if you get married, you have a name change, or if you retire and have a disability rating, it takes a little bit of time for that to update in the portal. And so if that should happen, what you do is you just let the lender know, and then you can plan around that time. This is one of the things that I think that when you talk to folks, if they are aware of the VA loan, one of the things that I think is really a misconception is that if I've used my VA loan at any point in my service, I can't use it anymore. And that is 100% not true. So then that's part of what we're going to talk about later on this evening is how you can use it multiple times. Not only use it multiple times, but also use it multiple times to build a long-term play of a rental portfolio to increase your net worth and your assets. So there's no maximum, there's no limit on your usage of a VA loan unless you have used all of your eligibility. So that's important to note. So what kind of property can I purchase with a VA loan? Again, this is another one of those myths, and I think that the misconception is that you can only purchase a single family home, and that is not true. So you can purchase a single family home if you choose to do so, but you can purchase a condo. A condo is a property that's housed either in a townhouse style, apartment style, and you own from the walls in. You can purchase a condo. You can purchase a townhouse that is, kind of like a 3-story, 2-story properties attached to something else. So it can be attached or detached. You could purchase a multifamily. So you could purchase a single family, a duplex, a triplex, or a quad. And how would that benefit you? If you decided to purchase a quad, for instance, and if you lived in one of those units and had the other three filled with tenants, you could still use your VA loan on that property. You actually can use the VA loan to purchase a mobile home or a manufactured home. I think that some people think that that's not an option. It is. And there's also a new construction VA loan that you could use. You can use it to purchase a home that has not been built yet and going to be built, or you can use it to purchase, if you've purchased land and you have that already purchased, you can use the your VA loan to build on that property. Ineligible property types. So you cannot purchase a commercial property. That's one of the guidelines that the VA has put in place. So for instance, wanted to have a storefront, you cannot use your VA loan to purchase that. If you wanted to buy a warehouse, cannot use your VA loan to purchase that either. And then also if something just sort of stands out, right? So you're in the middle of New York City and you want to build a log cabin, probably not going to work, right? Because that is not going to be approved by the VA. Raw and vacant land. You could buy the land not using your VA loan, and then use your VA loan to purchase or to build on that land, but you can't use a VA loan just to purchase a vacant lot. Again, undeveloped lots. And then also part of the VA, we'll talk about this further on into the webinar, but if you cannot purchase a VA or use a VA loan to purchase an investment property. So if you're going to purchase with using a VA loan, you need to occupy the residence. So, and that's what properties qualify for a VA loan. Borrowing limits. So this is, I think, one of the most misunderstood components of the, well, I wouldn't say maybe not the most, but another misunderstood component of the VA loan. So I'm not a lender. I don't pretend to be a lender. I work closely with lenders, but if you have some questions around these limits, it's really important that you connect with a lender so we can go ahead and they can help you figure out how much eligibility you have using your COE. If you've never used before, there's no limit on what you can borrow. If you've used before and you've sold that property and you have full entitlement, there's no limit as to what you can borrow. If you have a VA loan already attached to one property and you're buying another property but keeping the property that you already purchased, there's a whole calculation that they do to be able to see what you can and cannot borrow. But again, the loan, if you're talking about just the limit, county limits right now, our standard $766,550. But again, you look at that and there's sort of some maybes and what ifs and things that don't fit within that. So again, it's really important that you talk to a lender so they can really calculate those numbers for you. Occupancy rules. So as we talked about earlier, if you are going to be using a VA loan, must have to, VA guidelines are very stringent about this. You have got to occupy the property. And someone may say, well, then I think you just said about holding it maybe, right? And popping and holding this property and keeping it as a rental. So what that means is when you purchase the property, you have to occupy it within the first 60 days. And then be in that property for a period of time. And then when you relocate, when you deploy, or when you PCS, you can hold that property as a rental. And then the occupancy rules don't apply, right? Because then you're going to move and purchase another property. Let me go back here. I just want to mention one thing. So if you are in an area, and we'll just use here, for instance, and I'm in Chesapeake, Virginia. And so, for instance, if you purchase a home in Chesapeake, Virginia, and you've been here for 2 years, and you're like, hey, there's a good chance I probably could get orders, follow-on orders in the same area. The question might be like, can I still purchase another property? Because now I'm in the same area. I'm gonna purchase in the same area. You can purchase in the same area if like your orders change, you have a growing family, something happens to your family where you need to life happens, right? And so you can use it within the same area. There's just some guidelines around that. So that probably wasn't, yeah, let's go on to the next one. Co-borrower questions. Now, I think this is pretty cool. Okay, so if you are a single person that is active duty, and you want to go ahead and purchase something that is maybe a multifamily of some sort, maybe a single, or maybe a duplex, triplex, or quad, and you want to go ahead and purchase with another person that has entitlement, you can share that in, you can buy that space together, and then not all of your entitlement is used. So there's some little caveats around there. Again, I'm not a lender, don't pretend to be one, but again, this is something that you could sort of strategize around to be able to purchase bigger properties, especially for multifamily. And talking to a lender will be a great way to be able to navigate that. The VA funding fee. So the VA funding fee is what is a sort of a price, a cost that you pay to be able to utilize this 100% financing. And so the VA funding fee is a portion, and it changes over time depending on how many times you've used it, but it's a percentage of the overall sales price that is actually just rolled into the loan and it's financed. If you happen to be, retired and have a disability rating of at least 10% or more, you actually are exempt from the funding fee. If you're not exempt via a disability rating, there's no way to get out of the funding fee unless you, I shouldn't say that. There's no way to, there's a way you can get it not involved in, rolled into your loan if you pay it. You could pay it at closing. But that is the funding fee, and it varies depending on multiple uses or not. But it's normally around a 3% or a little bit more higher than 3%. So the VA loan is pretty much a nice little package with a nice little bow on top of it for all service members that have earned this right. I think it's an amazing opportunity to be able to not only purchase, but be able to hold property and then build a portfolio over a period of time of service using these amazing features, which is 100% financing. There's just no other product out there that is going to give you that 100% financing in addition to favorable rates. So if you look at all the products that are out there from a lender, right, and you're trying to kind of put them on a table, which one ranking order in terms of interest rates, without question, you're always going to have the VA loan have the best interest rate out there. And again, no monthly mortgage insurance, which if you're purchasing another property using something like conventional FHA, and you're not putting the maximum amount of money down, you're going to have to pay monthly mortgage insurance, and there's really no way around that. So what that is, it's an additional fee every month that you're paying. And with a VA loan, you don't have that. So again, really just some amazing components of a VA loan that make it really appealing. Okay, so this is where it gets super exciting. This is where I love to talk about this. So blueprint to $1 million. And what does that really mean? Like, what, Danny, what are you talking about? $1 million? Just use it buying a house? Absolutely. So we're going to go through a whole series of potential purchases and how you could create $1 million portfolio or more, making just purchases every time you move, right? And in doing so, there's going to be some assumptions that we're going to put in place. So some of those assumptions are this. So we're going to assume that appreciation year over year, meaning that my property is going to appreciate what percentage every year over the life of however long I own this property, right? So natural appreciation is around that 4%. Now, we went through this thing called COVID, so there was an appreciation that was off the charts. That is just not typical. So normal appreciation year over year is around a 4%. So we're going to continue that assumption throughout this whole example. We're also going to assume that interest rates are 6%. Again, at one point they were 2.25. At one point they were almost 8. So we're going to go right in the middle here. Well, not really in the middle, but we're going to assume that it's 6%. And we're also going to assume that these VA loans that we're going to talk about, that we've again utilize the 0% down. And then on any conventional and FHA loan that we talk about towards the latter part of this series, we're going to assume that we put 10% down and that we had 5 moves. Okay, so 5 moves over the life of a 20-year career in the military. We're going to show how it could turn you into a net worth millionaire. Okay, anyone have any questions so far? Okay, awesome. Oh, there we go. Okay, so here we are. So we're going to make some, again, you'll see the 5 houses we have here. And so we have the 1, 4, 7, 11, 16. That's the years of service. And then also underneath, you'll see this is going to make the assumption if you're starting out early in your career, that you're either enlisted or an officer, doesn't make a difference, and how over a period of time you can make a purchase with each move and really create an amazing portfolio. So we're making these assumptions right here. And this is because I've lived in these places. And so I'm just going to follow our trek. And so this could be somebody else's trek. It's going to be my trek. You could be in Maine when Brunswick was there. You could be over in San Diego. This is just an example and a snapshot of how you can make a purchase at every duty station and create an amazing portfolio. Okay. So here we are, the first time we're going to move to a duty station for we're young and we're just, we're going to Pensacola, Florida, and we're going to make a purchase. We've contemplated renting. We're going to think about purchasing. We're like, oh my gosh, we've heard about this VA loan. It's a great benefit. I'm going to go ahead and purchase a home in Pensacola, Florida, and it's going to be a $260,000 purchase. In that time frame, we're going to stay there for our orders are going to be for about 3 years. And after that 3 years, we're going to look at, if you can look on here in the screen, you see this, the first year, again, with that 4% appreciation, this is what the value of the property is going to be year over year, right? So the first 3 years, you can see those amounts. And again, we're using that VA loan right over here in Pensacola, Florida. What does this mean? This means that we've taken that $260,000 purchase price and we've calculated it with a 4% appreciation year over year over year up until retirement. Okay, we're some of the assumptions here. The assumption is we're going to hold on to these properties until retirement. So once we reach retirement in 21 years, that property that I paid $260,000 for is going to be worth $592,479. That's pretty sweet. But more importantly, I think to point out is that because you're holding that property and you're putting a tenant in place, that tenant is then therefore paying your mortgage. So it's the first property you have in Pensacola, Florida. You've lived in there for 3 years. You have orders to the next duty station. You put a tenant in place. You've run the numbers. That tenant is paying your mortgage and then some. And so here we are. We're going to hold on to this property and we get orders to head on over to Jacksonville, Florida. So again, we have that first property. It's still sitting in Pensacola, Florida. It's being paid for by your tenants. You're making that little trek over east to head to Jacksonville, Florida. And you're like, hey, I really like the idea of using this VA loan the first time around. I'm gonna figure out how I can use it a second time, because you can, and you know that you've only had the first one for $260,000. Now you've talked to a lender and the lender said, oh, absolutely. Yes, that $309,000 purchase price that fits in the box. You're certainly able to use that. You qualify for that. You have eligibility. So you purchase a home in Jacksonville, Florida for $309,000. And then over the period of time, by the time you leave, that property has increased in value based on that 4% appreciation. And it's, by the time you leave, it's $347,582. But you're like, hey, I kind of like this. I like stacking these houses up. I kept the first one. I think it'd be a great idea. It's going so well. I'm going to go ahead and keep the second home in Jacksonville because I know there's a lot of movement in there. I know that there's plenty of folks that move into the area that are going to need a place to live. I like being a landlord. I like the idea of cash flow. I like the idea of somebody else paying down my mortgage. I'm going to go ahead and I'm going to hold on to this property in Jacksonville, Florida, and put another tenant in place. So having done so, you're now you've been in Jacksonville for, a couple years. And so now you have 16 years to retirement. So what we're doing is 4% year over year. By the time you retire, we'll get to the final number at the end, but the $309,000 property that you purchase will be worth $578,751, which is kind of a big swing. So, and again, just remind you that your tenant is paying your mortgage. You've run your numbers, so you know that you have a little cash flow on the top of that to be able to take care of any repairs or any vacancies or any sort of property management fees. In the meantime, your tenant is paying down your mortgage. You're having some great tax benefits, all the things that make rental real estate an amazing option for long-term planning. You get the benefit of that, and you have your natural appreciation year over year. Okay. So then you get orders to Pax River. And so you head north and you head into Maryland. Now you have 2 VA loans sitting on those first 2 properties, right? So at that time, you've probably captured some cash flow, enough to be able to kind of put it in the, hey, what's the next house purchase look like bucket, right? You want to have that bucket. So you're putting some of that money away and you're like, oh, hey, look, the third time around, I potentially could use a VA loan, but if I can't, I need to explore some other options, right? So what might that look like? And you could use potentially an FHA loan or a conventional loan. But you've decided to go to Pax River. You were told to go to Pax River. You get to Pax River and you're like, I like this landlord thing. I kind of see the benefit of these buy and hold properties. It's gone really well. I see cash flow every month. I see my tax benefits, right? In terms of depreciation and write-offs. I see how my equity is building up and my principal balance is going down. Really, this is a good play. I'm gonna go ahead and make another purchase in Pax River. And when you get to Pax River, it's you qualify for $350,000 and you feel like you get a home that would suit your needs or your family's needs in Pax River, and you make that purchase for $350,000. At the time, so now you're getting closer to retirement, right? So now you have 13 years till the end of retirement. And so what you're saying is that $350,000 purchase, but year over year, again, that 4% natural appreciation, you'll see how that increases. Oh, there we go. Increases. And by the time you would retire after time of service, 13 years till retirement, that property that you spent $350,000 on will be worth $582,775. Again, this number is much less than this number, which means a lot of equity. Okay. All right. So you appreciate it and you love being on the East Coast, but Uncle Sam was like, hey, you're heading west, right? So you're heading to Oak Harbor, and who wouldn't want to go to the Pacific Northwest? I know we enjoyed our time there. We really enjoyed the Pacific Northwest when it was sunny and all the hiking and all that stuff that happened there. So, hey, you're heading up there. You might as well, you caught the bug for rental real estate, buy and hold properties. You're like, hey, I'm heading up there. I'm kind of on the other side of my first 10 years. I'm heading towards retirement. I think I see the value in making purchases and holding those properties. I'm going to do the same when I get to Oak Harbor. So you get to Oak Harbor and now you've had those 3 properties, right? You have one in Pensacola, you have one in Jacksonville, Florida, and you have one in Pax River. And so at that time, you're in Oak Harbor and you're trying to see what can I qualify for? Can I use a VA loan? I'm going to have to use a conventional loan. You hook up with a lender. That lender does a deep dive and really gives you all the benefits of what your options are. You make that purchase, and then you find a purchase that's going to fit your needs for $470,000. And again, natural appreciation, year over year, 4%. That $470,000 purchase price will be worth $695,714. And if you've been to Oak Harbor, Whidbey, Anacortes, you know that that's not an unlikely scenario, that's for sure. All right, well, we're heading into the home stretch here. So now they said, hey, look, I know you love the Pacific Northwest, but I hear Norfolk, Virginia is calling your name. And so as much as you're like, I don't want to leave the Pacific Northwest because it's beautiful, equally, coastal Virginia is pretty awesome as well. You have a lot of beaches. If you like the mountains, you can get there if you head west. So you're heading to Norfolk, Virginia, and again, you're like, gosh, this rental real estate thing, I see what people are talking about all this time. I see how it can really benefit me in terms of my long-term play, my long-term planning. I see how, my tenants are paying down my mortgage, these depreciation, all these tax benefits are pretty remarkable. And I'm not paying for anything. So yay me. So you're like, hey, I'm going to do it again. I'm heading to Norfolk. And I know, again, Norfolk, Virginia, right? I mean, you have Norfolk, Chesapeake, Virginia Beach, all these areas where there's a lot of movement, a lot of transition. If you're going to have a property that you're going to rent out, this is a place to do it as well. So I'm going to go ahead and make a purchase. And you do. $550,000 purchase in Norfolk area. We put Norfolk, Virginia on here, but it could be in Chesapeake, Virginia Beach. But you buy a home in Hampton Roads. And when you buy it, at this point, you see like the light is at the end of the tunnel, retirement is nearing. And so I'm going to make a purchase for $550,000. And again, we're talking about that 4% appreciation year over year. And when you have 4 years left to retirement, you can see the gap is getting a little less here, right? $550,000 purchase, but it'll be worth $643,422. But this is definitely less than this. So you can see as you're moving forward, you can see how that equity keeps on building, 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 and therefore your net worth is increasing, increasing, increasing. So you've been here in Norfolk, Virginia, and you had a great time. You've been to the beach, you've seen all the sights, you've gone to the Outer Banks, taken the family to Outer Banks, you've gone to Williamsburg, all the great things that we have to offer here in the Hampton Roads area. And you have decided that this is a great place to retire. So you're like, oh, I'm tapping out. I've been 5 places. I'm done. I'm throwing in the flag, or the towel, whatever it is you're tossing. And I'm finished with my career as a military family. And I want to go ahead and call it quits and head over to the civilian side. So as you can see with each of these properties, right? The first one in Pensacola, Florida, purchase price at 20 years. You can see what the value would be. Again, Jacksonville, Florida, Pax River, Oak Harbor, and Norfolk. If you look at all these values right here, this number right here, that's a big number. That's $3 million. So you then become an asset millionaire. $3 million worth of property is what you end up having. And the interesting part of that is that you didn't really pay for a whole lot of it, which is pretty remarkable. So let's go on here. So in that time frame, so let's go back. When you've had five properties in 20 years of service that you've had to move. I mean, you have to move. You don't really have a choice, right? Yeah, you're going to Jacksonville, Florida when you get orders. You're not like, well, I kind of dig it here in Pensacola. I think I'll hang out. Not an option, right? You have to move. So when you have to move, let's use that to your benefit. And when you have a VA loan eligibility and you've because you're in uniform, you've earned that right. How can we, use that to our benefit? Purchasing houses at every duty station not only gives you a place to live, but it gives you a great income and net worth. So after those 20 years, when you look at all the equity that you've built up over those 20 years, over those 5 moves, it's at $1,154,141. Let's just say that again, $1,154,141. Now, if you were to compare that to your years of service, just with your base pay, this is what you're going to make. $1 million, a little over $1 million. So if you just look at these two, I think that's pretty impressive, right? You knew you had to move. They told you need to go. I have VA eligibility. I have this awesome VA loan that I've earned by being in uniform, and I'm going to use it to my advantage to be able to be a millionaire. And I have to work when I get there. I'm in uniform. I have my duty, right? So you're still making money, but you're making money on just having to move and buying houses. And the remarkable thing is, again, you're not paying for that. Your tenants are. So all of this to say, you can strategize around using your VA loan to create a financial freedom. And so what is financial freedom? And I think every person has their own definition of what financial freedom looks like. But when you're looking at rental real estate and you're looking at buy and hold property over a period of time, when you buy your property, when you buy a home and you know what your mortgage is going to be, you can kind of run those numbers to make sure, if I were to rent this out, what would my rent be? Right. And so that's what it means when you're saying enhanced cash flow, better financing terms, purchase options. Your VA loan is going to give you give you a lot of options or a lot of benefit in using that VA loan. But when you're running your numbers, you can say, hey, look, if I know my mortgage is, just for easy numbers, $2,000, and I can rent this property out for $2,500 or $2,600, you're like, oh gosh, I can't get rich off $500, Danny, really? But the reality is that when they're paying down your mortgage, you have a little extra left, you run your numbers to make sure that you have any sort of CapEx expense, any vacancies, any property management fees. You can run those numbers before you ever make a purchase to make sure that you're protected on the other side of it. Asset diversification. Okay, you may have TSP, you have those accounts, but real estate is just another way to be able to create wealth over a long period of time. This is when I think funds for children's higher education. And everyone's like, oh, I don't understand that. What are you talking about? There's a 529, and that's one way to be able to pay for college, a 529 plan. And 529s are not terrible, but I would say that if there's a 529 plan, because obviously it's better than nothing, right? If there's a 529 plan, who is responsible for putting money into a 529 plan? Or, you can have aunts and uncles and family that can put it in, but there's a max as to what you can put in every year. If you buy a property and you hold it and it becomes a rental property and we earmark it for college fund, the person that's putting the money into that college fund is your tenant. So raise your hand if you wouldn't like someone else paying for your child's education. I know I would. I have 2 of them in college right now. And yeah, tenants are good to pay for that. So that's what I mean by funds for college or children's higher education. Funds to start a small business, funds for retirement. So you have you have your 5 properties in our example. And that's just an example. You could have more depending on what your orders look like, but we're just using 5. But if you have your 5 properties and you have your TSP, what happens when you're like, okay, I'm retiring now, what am I going to do? You could, if there's a property paid off and you still want to hold it, you could do a cash out refi on that property, use that money for something else. I mean, there's just so many ways in which you can manipulate those buckets, i.e. houses, to be able to fund your retirement long-term. Income tax benefits. Rental real estate is one of the greatest strategies to be able to mitigate your tax liability. And talk to any CPA, they too will say, between depreciation, write-offs, improvements that you make, you can write that right off. If you travel back to your rental property, that's a write-off. I mean, there's just a lot of different ways in which you could use those tax benefits to mitigate your tax liability. And then, of course, overall financial security. I mean, and who doesn't like that, right? You have 5 assets that are being paid for by somebody else. You have, I have a Band-Aid on there, 5 assets that are being paid for by somebody else. And you have all the tax benefits are amazing. Okay, these are just some testimonials by 2 families that I helped when they moved to the area. Both were military. Actually, military is primary. 98% of my folks that I serve in terms of help buy property are military. That is my passion. That's who I am. That's who I connect with. And that's when I want to shout from the rooftops. There's ways to be able to really manipulate your orders to different duty stations to be able to benefit that in terms of a big picture of wealth building. And I think that could be lost sometimes. And I may be here in coastal Virginia in the Norfolk area, but I have referral partners and agents all over the country and actually over the world that I connect with and have really good relationships with, that if you are to have to move someplace other than here, I know folks that are all around the country that could help you go ahead and and find a place to live, and make a purchase. And not only just make a purchase, but if this is what you want to do and you want to build a portfolio over your moves, it's a way to be able to talk to a professional to say, this is my end goal, right? This is my big plan. How can I get there? And make sure that when you're making that purchase, you're making that purchase with the big picture in mind. I also have really trusted lenders, whether here or across the country. So if know someone who's moving someplace else, or if you're moving someplace else, I'd love to have a conversation with you and make sure that I connect you with people that are really skilled in the process and that you're being taken care of. So I know, we're almost at 45 minutes, so we have an hour allotted for this. I appreciate your time. I know there's probably some other things you might have wanted to do tonight, but I think this is super valuable information. And if you know anybody else that would want to hear what we have to say about the power of using a VA loan, not only to live in a house, but be able to build a really amazing portfolio, I'd love to have a conversation with them. And we're having another webinar on May 13th. So let me see, are there any questions that you guys have? I'd be happy to try and answer any of them. And if I don't know the answer, I certainly can find that out for you. Let me take a look here. Let's see. Are there any special programs or incentives available for first-time home buyers using VA loans? Any special programs or incentives for first-time home buyers using VA loans? Well, VA loans, I think that's the biggest incentive is that you're using a VA loan, right? There's no down payment, but the best interest rate. So let's see, what was the other one? Sorry, I have my glasses on, so if you see me squinting, that's why. Are there any strategies or tips for making a VA loan offer more competitive compared to offers with conventional financing? Okay, so I think there's a little misconception out there, right? That VA loans are like, well, people don't like to have VA loans on their property as an offer, right? I think that's a little short-sighted and not really true. VA loans actually are super competitive. I think there's some misinformation out there, right, about appraisals and they don't close on time. That is absolutely not true. If you link up with a really skilled lender and a really skilled agent, that's what's going to make your offer competitive, right? I mean, so VA loans by far are the best loan out there. And if you get your team together, i.e. a lender and an agent, you're going to be a super competitive. Let's see. Do VA appraisals typically take longer than conventional appraisals? Nope. Again, that's another myth out there. No. I mean, appraisals in general, appraisers, that's a little variable that you can't control when you're within a real estate transaction, but VA appraisals do not take longer than a conventional appraisal. I think if you have your team in place, you have reliable, dependable real estate agent that's helping you through the process, and you have a really reliable and dependable lender that's teamed up with you, no, you're just as good with a VA appraisal as you are with a conventional. Okay, what else we got in here? Let me scroll on. Let's see. Anyone else have any questions? Okay, oh, yep, here's one. How do VA loan closing timelines compare to those of conventional loans? Again, I feel like if you have protect yourself by getting a very, very skilled real estate agent to help you make the purchase, and you equally have a very skilled and talented lender and that is on top of things. I've seen a VA loan close in 21 days. So, I mean, it's as your timeline is as good as the people that you surround yourself with. And so just make sure you surround yourself with good people that are really looking out for you and doing a great job, and you protect yourself against all those as much as you can against those maybes and what ifs. Okay. Well, I think, let's see, do you have any other questions in there? I think we're good. Again, I want to thank you guys for showing up tonight. I really appreciate it. And if you have any questions, please feel free to reach out to me. And again, if you're moving to the area, I'd love to be able to help you, at least have a conversation. If you're moving someplace else, I'd still love to have a conversation and connect you with somebody who is going to take care of you on the other end. And then again, if you need a lender, whether you're moving here or someplace else, again, I'd love the opportunity to connect you with people that I know that really know what they're talking about. Because people will say they know what a VA loan is, and the reality is that not everyone does. There's some misconceptions out there, even with not only even with agents, but lenders alike. So just make sure you're protecting yourself and making sure you're putting the best people in your corner to get you to the finish line and get what makes sense for you. Okay. All right, guys. Well, whoopsie. There we go. I guess that's the end of the slideshow. All right. Well, thanks so much.